All right. Everyone, thank you so much for tuning in. This is our weekly installment of Office Hours with Precision Markets, where you got your Precision Markets coaches, Nathan and myself, here to answer any questions that you may have. Also, be able to share any kind of pictures and be able to help kind of go into things in depth a little bit more than we can when you have just Discord and text. So, for those that they're the first time that are joining us, the format is that in the chat box, we want you to go ahead and ask any questions that you have. And then Nathan and myself are going to review them in the order they come. The only thing we ask is that you be respectful of others when they're asking questions in their time. We also allow you to come off mute if you want to be able to voice anything or even share pictures or a chart if you need to when it's time for your question. So with that, we'll go ahead and begin and let everybody ask their questions. So don't be shy, guys. There's no such thing as a bad question to ask. And we dedicate this time, really just dedicate to you so we can be able to answer any question that you have. If you also want to know how to have amazing arms like Nathan is giving up a coaching course and a fitness journey so that you can become the best version of yourself and be the strongest trader ever. Ain't that right, Nathan?
Yeah, you can lift all the pips in the world.
You can lift all the pips with your pinky. That's how talented Nathan is.
You're able to take as many hits.
Have you seen that meme where the guy's like, every time you take a loss, do a push-up, and then like 6 months later, the guy's like completely ripped. And he's like, whoa.
I think I've seen something there. Oh, that's a good one.
That had me dying. I need Marco to get the meme, put that meme inside of the memes channel because he's on it.
How was your day today?
It was good, man. Working on some secret sauce.
Ooh.
Secret sauce is working for me today, though. Something I happen to notice from been looking at the charts, like it jumped at me like a ton of bricks. And I was like, wow, never noticed that. And then I applied it today and bam, I was hitting a couple of home run wins back to back. So
amazing. That's what tends to happen. Once you see something, constantly on the charts time and time again, you're able to implement that and test it out and see how it goes.
It's no great. Kidding. Like it just, the more time you spend on the charts, you just begin to see stuff. I used to never forget my very first mentor that taught me in trading. I was here to come up with these new strategies. I'm just like, how do you keep coming up with this stuff? And he says, you just can't unsee it once you're on the charts.
Yeah.
Like you literally just can't unsee it. And I've been trying to figure out how to get rid of some of my break evens. And I looked and I just was looking at those break evens, the wins, losses, and I was just like, wow, how did I miss this before? It's like clear as day. So awesome. Applying the secret sauce today.
Ooh, yeah.
All right, guys. Y'all a quiet bunch, man. All right, we got our first question. Let's get this thing popping. All right, from Solomon. Hey, guys, do you have a way of determining whether supply or demand is in control? Do you simply follow order flow? Because I try to pay attention what price tapped last and see if it holds. Okay. Good question. I'll share my chart real quick and I'll show you my way that I kind of look at it. And then I'll let Nathan chime in after and share his way once I can figure out where my chart's at. All right. Can y'all see my screen?
Yeah, we can see it.
Awesome. So when it comes into who's in control of what, right? Let me do this actually. Part of it is for me, like I look at first at direction, right? And so let's say, for instance, I'm looking and saying, all right, I know price is cleared this high, made a higher high. We have a bullish candle. It's making highs. I'm still expecting the market was going to go up. When I come to the 15-minute time frame, the thing that I look for is I look to see, all right, where's the last supply or demand? And this is something that I also kind of do. I'm going to show you something a little bit different that I do. Well, here was the last high. This high was broken with a candlestick body. So therefore, we got some demand that's right here, somewhere within here. And that demand, then I'm looking at, all right, if it passes this through and you have a break of this demand right here, I'm looking for my next high and probably looking for this point right here. And so right now, price would come into this, it bounces here, but it still stays along this demand. So right now, I don't have any supply specifically that had broken a demand. What I can find is, even if I go back even farther, here was a demand zone, and then price pushed up from this demand. So right now, when I look at in what's in control, is I look at demands are in control. Once I see that, for instance, this low point right here gets broken, then I would know that the last demand was broken, and that the cause might be, for instance, some supply that's right here. And that supply now means, all right, supply has overtaken a demand. And if it breaks another supply comes in and breaks another demand, then I can say, okay, then I know that supply is in control. Does that make sense, Solomon?
Yeah, definitely.
And sometimes what I'll still do is, even if a supply takes over a demand and the price goes back to a previous demand, I may still end up taking, for instance, that buy if it aligns to my bias, because price can pull back at any time. Price can do whatever it wants, but if I go against what's in my 4-hour bias more than I look at what's in control and supply and demand on M15. I want them both, my M15 and my 4-hour, to be in alignment, if that makes sense.
If I can just add into my question, is that all right?
Sure.
So say if I have my higher time frame bias from the 4-hourly or say the 2-hourly at the least, and say I'm looking for longs and looking for a buy, but I have price coming down from a supply, say on F15. Would you would you wait for price to first demand react from demand you want to buy from on 1M, say when it taps your 15M, or do you want to see on 15M that it breaks the supply and then look for entries? You know what I mean?
I personally don't trade when it comes into a 4-hour, 2-hour zone. I want to see a M15 or M10 to M15 demand or supply zone that it comes into. So say, for instance, if your bias was buying, but it's coming from M15 supply, if it taps into a previous M15 demand, I might take it. But if it's just tapping into like a 4-hour, I will wait to see a reversal on M15 so that I can know that we have some momentum going on in alignment. I don't like taking trades when 4-hour and 15 are in different alignments. Well, because more or less on the 15-minute, I'm just looking at order flow, but I'm really looking at market structure on the 4-hour. But I want market structure and order flow to be aligned so that they can be able to hopefully give me the greatest odds of success in my trade, if that makes sense.
Yeah, you mean that your M15 has to be in line with the 4-hourly, and only then you look for continuation trades, right?
Correct. Yeah, it has to be aligned, but it has to go against my directional bias. So whatever my directional bias is at that time, that's where I'm really willing to take the trades, and that's based upon a 4-hour market structure viewpoint. And then the order flow should be able to match that. But there's some times where I've had it where, for instance, this demand gets broken right here, and let's say price comes in here, and I still think that my directional bias is buying. I might take a buy from here because it might do something like this and eventually go, but it's still going in line with what my bias was. Does that make sense?
Yeah. So if it chalks down, say if you're looking for buys, but on F15 it chalks down, you wouldn't count that as a downtrend for F15, right? Like you want to see price coming down, but be in line with your higher time frame. But my question is like, if it chalks down, like, you waited for it to chalk back up, or what do you think about that?
I don't really think about it as chalks. I just think about it where it's supply and demand on the 15-minute. I don't even look at it from a structure standpoint, because all I look at is the 4-hour structure. And on the M15, I'm looking for the most recent supply and demand zone. I'm not even thinking about chalks or anything like that, if that makes sense.
Yeah, yeah,
So that's why I could be able to take this, because it tapped into a demand zone. And I think that my 4-hour bias is buying, but it's, even though it tapped in, even though it did a supply broke here, I believe that the price is still going to go up from there. And I don't have a reason for price to reverse on the 4-hour. I'm going to take this buy. But the safest thing is taking the most recent supply or demand zone. So if price comes here and it goes up and it makes a high, I would be taking buys from here. And then after it goes and breaks through this low, it really wouldn't be as high probability. But just because the M15 changes, it's the first indication, but I need to have like a reasoning behind from a 4-hour perspective why I believe it. So for instance, like right now in the market, when you look at the 4-hour, the 4-hour just made a higher high. So right now, I would expect price to come into this 4-hour demand and possibly price to pull back, tap into it, and then continue. So now I would look for on the 15-minute is that we had our last demand zone that was right here. I'm waiting to see what happens when this breaks. So
yeah. I was thinking about that too.
So
Same zone that I was looking at.
And so if price breaks here, let's say price breaks overnight, it breaks here, then I'm expecting to take a sell from here. If it does it again, I'm gonna take the sell from here, and I'm gonna keep doing it until it comes in here. And at this point, I'm looking for the first demand so I can take trades on all of my all the demands. So it would be something like, supplies. I would take supply here, supply trade here, supply trade here, and then I would flip it to taking demand trades once it shows that a demand was broken. But that's what I mean by it's supported by my H4. This would be my H4 zone right here. I see that price ends up, a supply gets broken and a demand forms. That's why I would switch my bias and take it on the 15. Does that make sense?
Yeah, it definitely does. Even the stealth that you take, they're in accordance with H4 because you're expecting a pullback. Yeah, definitely.
Mm-hmm. So everything I pretty much trade is off of the 4-hour. The 15-minute just allows me to find entry points that are aligned to what the 4-hour bias is. Does that answer your question, Solomon?
Yeah, thank you. Definitely.
No problem at all. Nathan, did you want to chime in and add anything to that?
Not too much, pretty much what you said, quite similar to the way I look at things. Personally, for me, order flow, it's essentially, it is structure with combined with supply and demand. So same thing as in where's the 4-hour direction. And if we're expecting, say, a pullback on the 4-hour, we're expecting to see demand and control on the 15M at least. So 15M with demand, and I also use chains, so supply and demand chains. Those are like the most important things for me to understand order flow, because order flow is structure. However, it's combining it with supply and demand, and then chains as well. So chains is just showing a little bit deeper of kind of where price is coming off of, in a way. So if you can understand chains, you can see where pullbacks can happen. The most important chains is definitely the 4-hour. The 15 does changes quite a lot, but just like you've marked out there in your chart, I'll just annotate on top. I'll just show a quick example. So the last 15M chain we had was actually down here. And we chained off another demand, and so on, all the way down to the left. Now that we've come and taken this high, The expectation is if we want to take sells to complete this pullback down here, we want to see supply controlled. So for me, I'm starting to see chains happening here. So we had a reaction off demand inside here. We have a chain now building here, and we're starting to push down to break new lows. Everything is chaining off each other. So I can start to see a shift within order flow. Once this low goes, that's the official shift. So for me, I just use supply chains. It just helps with the eyes a little bit. Some people find them a little bit confusing, but for me, it's you can see these ones are going to chain here. That's going to probably chain down here. And that's essentially it, really. But most important is what is the 4-hour doing? What do we expect? And do we see that on the 15M? Because if we are expecting a bullish pullback on the 4-hour, is demand in control? And once demand gets taken out, it doesn't necessarily mean that's it. We got to take sells. You can, but looking at more breaks of demands and more lows to be taken, we can look for that extra confirmation to go short too. So if you ever feel like the first low is a little bit risky for it to go, you can always wait for the break or retest and then a continuous break and then take your shorts, rather than just maybe jumping in too quick. That's totally down to personal preference based on your psychology and your risk in general. But that's the way I would see it, is through chains and 4-hour structure.
Master class, guys. Y'all getting all the sauce today. All right, let's see who we have next. All right, I cannot pronounce your name, so I'm not going to try to butcher it. If price wicks long into supplier demand, would that then considered fully mitigated, or multiple wicks before it's fully mitigated? When it comes to supply and demand, I don't really think about the wicks, to be honest, when it comes to like mitigation. So you don't know how many times supply and demand can be tapped before it can go off, before price can go off. So I'll give you an example here. Sometimes, let's say, for instance, here's the demand, and here is the high that it just cleared. And so now you have an expectation that price is going to go up from here and then come in, tap into the supply and go up like it did, right? But if you look at it, let's look at how many times it tapped in here. You have this tap in here. You have it going almost all the way into the very bottom of the demand. It goes up, it doesn't get a reaction, and finally after 4 taps, it goes. So what does that really mean for us? I mean, for me, it's that when price decides that it wants to go, will go. Also, if not, it'll decide it'll go through it. But you can't say that, for instance, if it comes into 50%, it's fully mitigated to me, because sometimes that can be true, sometimes that's not. But if you go back and you test and you say, all right, let me look at every time there was a demand zone and just go back and test, you're going to find it's little random results. So here the price was broken through here, broken through kind of this last high. Price goes in, it comes up, price goes and breaks through, but then price ends up coming upwards. Would it probably tap into? Well, this part right here could have also been, this could have been a decisional zone. Here you have more of a extreme zone or another decisional, depending if you pull this as the extreme. And then boom, price has one tap, becomes about 50% there. Now, the thing about supply and demand that we have to keep in mind is that what we're really looking for in supply and demand is that we want more to consider our fresh zones. So if price comes into here, and let's say, for instance, we have a demand zone here that we're watching. When we look at price, if it comes on the first tap, great. If it comes on the second tap, we're still likely to take it. But if it comes on maybe like a third tap, more than likely, price might end up actually going and go through like this, or price could actually end up going straight upwards. But the more times it comes into a zone, it's more, I would more kind of think about it from a perspective of mitigation, because ultimately, if the zone is strong enough, it should provide resistance from anybody trying to go through it, and it shouldn't allow price to go up. But after, like imagine if you're trying to break down a door and you hit it one time, it's pretty strong. But if you keep ramming that door 2, 3, 4, 5 times, it's going to become weaker and eventually it'll bust. And that's how you should think about kind of mitigation. It's not the number, it's not like a wick, or it's not a certain point. It's probably more or less the number of times that it gets tapped. And that will determine how strong it'll be. And, you know, if it's mitigated or not. I hope that makes sense.
Yeah,
Nathan,
like
anything
you also have one up here also. Got tapped into here.
Uh-huh.
So this might be considered another block then in the future.
It could. I mean, you really have, this was your last high that was broken, and then this was all a high. Depends on if you take this is more of a substructure. This is a substructure point because price really came from here to here. This was the low. This was your new high. And then price still hasn't broken this low. So you have, this is more of a substructure pullback, and this is probably a substructure high. And it also hasn't gone to break in anything substantial. So what you really want to be looking at is waiting to see if this low gets broken. And then at that point, you would go back and look and say, okay, where do I possibly have supplies? So if this ends up breaking here and coming back, you could pull, for instance, this area as a supply for yourself. Or you might pull, for instance, somewhere in here and just pull this whole little range and say that this range is your supply. Does that make sense?
Yeah. Thanks.
No problem. Nathan, you want to add anything to that?
No, perfect, man.
Awesome. All right. Our next up question. I cannot pronounce anybody's name today. I apologize. If price hit supply and demand 4 hour, my idea was for to break the last 15 minutes supply and demand. So price hits the 1 hour, which time frame can I check for confirmation of reversal continuation? I mean, that's really up to you when it comes to like how you look at it. So like, for instance, I only really need 2 time frames to me. I use the 4 hour, I use 15 minutes. Sometimes I use a weekly too, if I need something above the 4 hour. But if this is the 4 hour demand, and where's my demand? Oh, there it is. This is our 4 hour demand, right? And so if I see price comes into it here, I'm going to look for, on the 15 minute, I'm going to look for a demand breaking a supply and then coming back to tap into that demand and for price to go up. So you utilize them in kind of a combo. So the combo is, like Nathan mentioned a few minutes ago, is we use market structure and supply and demand. They work hand in hand. And you can also use liquidity concepts. So I have my 4 hour market structure, which tells me that we have a confirmed bullish, trend because we just made a lower high, we've made a higher high. And for me, this is going to be a higher high after I have one more, after this candle closes, this will be at my next higher high in about an hour and a half. So then this would be the lowest point, which would be my lower high. My higher low. And I'm expecting that this would be the demand zone that price would tap into. So on the 15 minute, I'm really expecting price from a bias perspective to go down and pull back on the 4 hour, which 15 will have supplies that'll end up being created. I'll take those supplies. When it hits this 4 hour demand spot, I'm waiting for a supply to be broken on the 15 minute. And then once I see that, boom, I see something like this, I might take my entry here, or I might take an entry here with the expectation that all this right here, this high has to go, because this would have been the last higher high from a 4 hour perspective. This would be my new potential 4 hour higher low, and that I'm expecting price to go through something like this. Does that make sense?
Yes, sure. Thank you, man.
No problem. So you could go into the 1 hour. I don't use it. For me, I don't really need it, because once you have your 4 hour zone, I just look to my middle time frame, which is the 15 minute, or anywhere from 10 to 15. And I'm just looking for supply or demand to show me that it broke through, because then that would mean that, okay, this demand from the 4-hour perspective is strong. And I'm expecting that the 15-minute demands are going to keep holding until price comes up and eventually takes out that 4-hour high and continues on with how market structure says. So it's like a really big combination between market structure and 4-hour market structure, 4-hour kind of bias, and supply and demand. But combining all those together would really help you, and you'll be able to see it. Sometimes you may be able to see it better on the 1 hour, sometimes not. So it just depends. But ultimately, you can figure out what time frames work the best for you. So generally, you just probably need really 2 time frames: a higher time frame and then a time frame for you to find your points of interest.
Yeah, I got it, mate.
Awesome. All right. And we got a question from Milton. What is the name of the tool used to calculate RR? What is this thing called? They just call it long position or short position within TradingView. So that you're referring to TradingView, right, Milton? Let me know in the chat. Oh, you can come off mute too. Let us know if that's the one that you're referring to. You can find it on the sidebar here, and you'll have long position for buying trades, short position for short trades, and then it'll help you to tell you, for instance, how much R. I have it on compact stats, so I just want to know like what my stop loss is, take profit is, and what is the RR. Is that what you needed, Milton? Let us know in the chat, or you can come off mute too.
Yes, it's clear.
Okay. Awesome. All right. Well, look at what Marco's asking. Would you mind sharing your secret sauce? I'm generous today, guys. I'm gonna share with y'all what the secret sauce I was coming up with. So, all right, guys. Let me actually go back to a different pair. Let me go to where I noticed it first. Okay, perfect. All right, so okay. So the whole day today, my bias was I was going to take buys on the 4-hour, but I was waiting for this candle to close here, waiting for this candle to close and get me a bearish candle. If I got a bearish candle, I would take sales into my 4-hour after my 15-minute gave me a change. I wake up right here every day. So it's 5 o'clock my time. I don't know what it is. In UTC, I think it's like 6 hours or 7 hours more. And so what I had seen was we had a demand zone here, and I pulled some demands now a little bit bigger so I can be able to find more entries into a trade. So I woke up here and trying to find first trade entry. Okay, here we go. One of the things I've been trying to reduce is the number of times I get hit on break evens or take losses on seconds. So what I was looking for was a way of measuring momentum. So come here. I'm trying to make my times match up. I don't know if I got this on UTC over here, like I can read that. One of the things I noticed that was common in one of the things I noticed that was common in a lot of the trades that I was taking was that there's a difference in where I can tell where I have a higher chance of momentum coming in the market and helping my trade go, or there's a chance that price doesn't. So I had my zone pulled a little bit bigger like this, and this was the first chalk that we had. So this was on a 15-second time frame. Price chalks here, but what I want you to pay attention is look at how this was the first candle where price chopped, and it also ended up being our spot where the high was created. So technically, yes, this would be an entry. You would take a trade here, and then you might put your trade at halfway, and then boom, you would have been taken out. It would have been a complete loss. And what I noticed is that this is actually probably not a higher probability trade when it comes on this one candle. So next, I'm gonna go to the next entry that I found. Now, this one, it broke, it made a chalk here, but I want you to pay attention to the fact that now we had 3 to 4 candles before it created its new high point, which the new high point was created right here. So now I'm pulling this area as my entry zone. And even though it's a pretty wide area, I take an entry based upon this candle breaking. And price ends up, that's what news. Price ends up giving a strong reaction. And it gave me at least 3R if I did it by candle. If you had put a limit order and did halfway entry, this would have been a 6R trade right here, just like that. And then got one more. It comes back in, and this was after the news. So this was the news right here. We're still in the zone because price never really broke this low. But so again, price breaks this low right here. And instead of, it doesn't have one candle, it had 2 candles before it made a new high. And so then you put your entry here. Let's say I use it based on candlestick bodies. So this would have came in here. A stop loss would have been somewhere back here. And boom, price goes up for 2R. But overall, price would have gone up, and you could have gotten at least a 7R trade out of this. Then price comes back and taps into the same thing here. This one only was 1 candle, but it breaks this high again. And this time there are a couple of candles, 3 candles, if I could circle them, 3 candles before it goes and breaks. So this was a strong break. Price comes in here. I set my order. I say you set your limit. You set your limit order and go right here. This would have jumped up for 10R. So what am I getting at? The real key thing was that the way that it breaks the chalk is important. And for me to really know that there was momentum in the chalk move, I want to see it not just break and make a new high with just 1 candle. I want to see it break with a couple of candles before it makes a new high, a new pivot point, and then boom, those trades usually end up being really explosive trades where the market goes. So this one was the one that would have been a loss. It was funny because I saw this chalk and I said, I caught before price had gotten right here. I said, it doesn't matter what if price taps into my zone, this is going to be a lost trade. And not even a couple of seconds later, I was proven right. When I saw price come here, I said, this trade's going to go, and it did. Only because I looked at how it broke the chalk. And so it helped me to weed out some of the lower probability chalks that end up just going against me. So that's my secret sauce. Now y'all almost died. Just kidding. Just kidding. But Marco, don't be going on Instagram making fake accounts selling this as a new course.
Yeah, this shit's copyrighted.
What'd you say?
I just did it.
Dang, I was
thanks,
too late.
thanks. This was perfect. Thank you very much.
You're welcome for the ideas, my friend. But yeah, guys, that's just something I noticed about chalk breaks. And I mean, I chose on 15 seconds because I like to look at 15 seconds, but it also applies for 1 minute too. I mean, it's not subject to just one time frame. I've gone back. I've looked at the last 3 weeks of trades that I did on GU, EU, NASDAQ, and AU and UJ since yesterday. And I found this to be a consistent thing. And that's the thing that I was talking about in the beginning, like the time you spend on the chart, you just start noticing little things. And those little things that you notice ends up being like things that you can apply your trading and make your trading even better. So, but yeah. So that's what I noticed, guys. Y'all getting it here first.
Very good. Very good. Nice idea. I will back test it, so I will see how it goes in 30 seconds and 1 minute, I guess.
Awesome. Awesome. Yeah, the more data we can get, the better, guys. I mean, I'd love for y'all to back test this. Don't go try it on live markets, please. Please don't go do this on live markets. Back test
Know
first.
your account.
Yes, you blow your account that way, guys. I did some of these on demo trades for some other ones that I found later because I kept seeing more opportunities. I just wanted to see if this would continue to work. And I found it worked for me on seconds, multiple. Like there was a bunch of trades I could have found on NASDAQ today after the market opened that all went to go on my demo account, just applying this theory along with everything else that we do. So, but definitely back test first. I back test at least 100 trades yesterday and another 100 today. Continue to see if this continues to do what I need to do or work for me. All right. We got our last question. If you spot a demand or supply at the 4 hour, you would then investigate to see if you can find a smaller zone on the 2 hour, 1 hour, or 15-minute. Try to refine it if the zone is too big. There's another secret sauce that I haven't told y'all about that I've been working on too. That, to be honest, I don't refine zones anymore. I don't even look for the small zones anymore. Actually, I take actually really big zones. So it allows me to get into a few more trades. But I've also found that the more trades I get into, they're not losses by not taking the refined zone. But that's just me. I'll let Nathan chime in.
Yeah, no, I don't really refine anything. I just pick the best zones that done something that gave some sort of meaning. So for me, it's more like I love liquidity. So sweeps and breaks, flips that sweep and break. Those are mine. Anything with inducement sitting on top, I don't refine anything. I used to refine stuff down to like the 1M all the way down to the 1M. But there's no need for it, honestly, because price can tap really off anything within that zone and go. So to be honest, the bigger the range, like Brian said, the better. You don't need to refine. Yeah, that's it.
Yep. All right, guys. Thank y'all so much for tuning in. Thank you for the questions. If you have questions that you didn't get a chance to have answered, don't forget that you can always ask questions inside the Discord. And so we're there around the clock between our student leads, Rob, Nathan, and myself to answer any questions that y'all guys may have. And don't forget, on Thursdays at the same time, 12 p.m. Pacific Standard Time, we're going to have our Power Hour with Rob. So definitely you can have your questions answered there, or you can always tune in for the next office hours, or even just be able to pay for one-on-one coaching time. So what that means is that we, on a one-on-one coaching time, we're going to give you an hour of our time so we can be able to make sure to help you learn any kind of concepts or things that you really need for us to help you be able to master. So we're in your corner. We're there. It's dedicated time for you. Don't hesitate. Look at it for the coaching links inside Discord. But guys, it's been a pleasure talking with y'all. Thank you for the great questions and commentary, and we will see y'all in Discord.
Thank you very much, guys.
See you guys.
See you.